Hello, Austin. Today we're going to talk about those rising interest rates. We're going into our 6th consecutive week of those puppies just climbing up and up and up. How much more can they go? What is the Fed doing this to us for? And what options do buyers and sellers have whenever the market is being stomped on in such an aggressive manner? This and more in my video today.
Well, I'm going down to Austin, Texas. I'm going down to save my soul.
Let's start off first with a quote from Mark Fleming at First American. He says that when the economic uncertainty dust settles, those buyers and sellers who are on the sidelines will jump back into the housing game. So what I wanted to share that for is just, let's all take a deep breath. While we all feel so much fear and uncertainty, which is understandable since a lot of the news out there is sharing words like crash, drop, falling, look out below. It's just pouring through our feeds right now. But what I want to do in this video is help bring just a little bit of clarity so that anybody out there that does need to buy and sell in the near future, you can put together a game plan of what's going to fit best for you. Because while we are sort of in an uncomfortable position here, we don't have to feel scared or uncertain. We can continue to try our best to look at what the data shows. So what I have for you here is a chart that shows the Freddie Mac 30-year fixed rate since January of this year all the way through the end of September. And as you can see, the mortgage rates have just been rising throughout the year. And then we are actually on our 6th consecutive week of having the mortgage rates rise. And those orange bars that you can see over on the right is highlighting that 6 weeks. And so they are just at this really sharp incline. Mortgage rates are rising very rapidly. I did double check and see how it went for the first, week and a half here into October. And they kind of leveled out, but that's not the point of what I want to highlight here. What I actually want to highlight is that we are just on this upward trend, an upward direction for mortgage rates. So now let's take a look at Sam Cater from Freddie Mac and see what he's saying about those interest rates today. The uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year. So clearly, there's a significant increase happening here. And so a question that a lot of people are having is, why are the rates going up so rapidly? So I have a quote here that I want to share from Odetta Kushi from First American, and it says, "The aim of Fed tightening is to curtail demand in an effort to tame inflation, and when it comes to the housing market, the Fed's actions are working." So the Fed is obviously trying to tame inflation, as we all know, and so they are making moves to slow the economy down, and so that will affect mortgage rates. One move that the Fed makes that affects our mortgage rates is going to be allowing the mortgage-backed securities to fall off their budget and not repurchase them, which they have been doing. Another thing that they could do in the future, however, around September 22nd, Powell said they are not near this decision yet, is going to actually just be selling those mortgage-backed securities. So while he says that they are not doing that in the near future, it is a piece of news to follow if you are curious about what will happen with mortgage rates as we carry on into this adventure. Inflation is the enemy to long-term interest rates. So while the Fed continues to try to bring inflation down and make those moves to slow the economy, those are going to continue to cause the mortgage rates to go up, which has a direct effect on our housing market. So yes, we are seeing a significant drop in sales for both new and existing homes. Builders have cut back on their production in response to the rapidly declining affordability. And then our annual home price growth has started to slow, where we had our peak at about 21% in March of this year, down to about 16.7% in July of this year. So we are certainly seeing a cooling of the housing market in response to the rapidly rising mortgage rates. And so what people are now asking is, well, what's next? What's to come? How much more? I have some information for you on that. I have George Ratiu, a senior economist at Realtor.com, and his quote is, "While even 2 months ago, rates above 7% may have seemed unthinkable at the current pace, we can expect rates to surpass that level in the next 3 months." So that's the place that we're at right now, is a rising mortgage rate environment that is directly tied into how inflation is going. The next report for inflation is going to be released on October 13th. So that's right around the corner. So we'll have some more information then of how that's going, and then we'll have the response from the mortgage rates, and just have a lot more information in the next week or so on that. So in the meantime, if you needed to buy or sell in the near future, what do you do? I mean, a lot of you are going to make the choice to go ahead and pause that search or that hunt or that plan, but some of you don't have that luxury. And I want you to know that there are solutions out there, so let's talk about those next. The first thing that I gotta get out there is, man, oh man, does it matter that you get yourself a good lender. So when you start working with a realtor, check in on what lenders they often work with and who they trust, and call and interview those guys. Interview many lenders. See what solutions and offerings they have. See how good they are at explaining the situation to you, and who you feel the most comfortable with to talk about your finances, because this is going to be a really important decision. If you are needing to move into this market, make sure that you have somebody on your side that is doing a good job at helping you navigate how to take on a loan at this time. Something that my lenders are talking to me about and having me pass along to my clients to open up and discuss with them, because you should always be talking about loans and details of loans with a lender, not a realtor. So I'm just here to kind of present this package that you can take and then go ask a lender about. But a solution that I'm seeing them talk a lot about right now is a 3-2-1 temporary buy down or a 2-1 temporary buy down. And the idea is that you first need to qualify for whatever the current interest rate is. So you have to make sure that you are able to support whatever the current interest rate is. So you will have to qualify. Then what you can do, and this is, I'm speaking to buyers at this time, is you are going to be able to temporarily buy down that interest rate for the first 3 years or the first 2 years, depending on which one you go with, the 3-2-1 or the 2-1. Now, most buyers would say, okay, so you're telling me to put more money up front, and so that's how I solve this problem, is just spending it up front rather than throughout the life of the loan. The idea is to then have the seller pay this as a concession to help make this deal happen, because sellers are in a real pickle right now. They need you to look at their house, consider going into contract with them, and they want to do so without having to knock off hundreds of thousands of dollars off their list price. And a way that sellers can do that, now I'm talking to sellers, is to offer this concession towards buying down an interest rate for the buyer. That money spreads out farther, gives more savings to both the buyer and the seller, rather than just knocking off the entire amount off of the sale price. So just something to bring to whatever lender you work with. Be sure to do a good job in picking your lender, and see what they think of these 3-2-1 temporary buy downs or 2-1 temporary buy downs. I really emphasize the temporary word. It is so important for everybody to understand that at the end of those 3 years or the 2 years, the actual true interest rate does come into play. The hope is that over the next 2 to 3 years, the mortgage rates come back down, and so then you're able to refinance into a more reasonable interest rate. The potential is certainly there that a refinance opportunity does not present itself, which is why you have to actually qualify for whatever the current interest rate is to make sure that you can support that when it does come into play at the end of the temporary buy down. All right, one final disclaimer. Again, I am not a lender, so you have got to take the tips that I'm giving that I just use as a realtor in negotiations to an actual lender and discuss if it's the right strategy for you, and make sure that you completely understand all the ins and outs of that loan. So we're going to go ahead and close up this video. I've got one more quote here from Mark Fleming over at First American, and he says, while mortgage rates are expected to continue to drift higher over the coming months, that's what we're seeing right now, much of the rapid increase in rates is likely behind us. Maybe that can hold to be true. So let's go ahead and try to trust our professionals out there, and not to engage in all the fear-mongering going on. We need to get through this bumpy ride, and together with professionals on your side, you can still enter into this housing market if you're needing to buy or sell this year. My name's Randi White, and I'm your local Austin realtor. It's a total pleasure doing these videos for you guys, and I will be back soon with a discussion about home values. Thank you so much.
Well, I'm going down to Austin, Texas. I'm going down to save my